All right, what is up, tycoons? What's up, traders? Super excited for today's video, coming at you guys with a viewer request. We're going to break down all right, this is the Realty Income Corporation stock. We're going to take a look on the daily chart, go over some of the warning signs that you need to be prepared for, as well as the major support levels that if we hold, we could actually continue pushing higher. I'm going to break down the different strategies, as well as take a look at the RSI and show you guys the divergence there is there that you definitely want to be prepared for, so that way you don't catch or rather aren't caught by surprise by any unexpected moves. So make sure to smash that like button, subscribe to the channel if you guys are new. I do these viewer requests every week, so if you want to see your stock, your crypto, whatever it is, bond in the next video, all you got to do is comment down below and I'll get to it as soon as I can. Now, what we're going to go over in this video, all right, are going to be the Fibonacci levels right here in yellow. All right, we're going to go over some of the structures. We tend to see either 3-wave or 5-wave structures in the market. There's a possible chart pattern known as a head and shoulders trying to form right now. And we're going to go over the bullish price targets as well as break down the RSI as I mentioned earlier. So smash that like button, subscribe to the channel if you guys are new, and we're going to jump straight into it. So the reason we use the Fibonacci levels, and there's 3 in specific, right? And the reason being is that these 3 are the most common and well respected. But as you can see over here, we actually do have 4 levels drawn up. But specifically, especially if you're brand new, you want to start off with the 38.2, the 50%, and the 61.8% level. And the reason you use these is because nothing moves in a straight line down or in a straight line up. Rather, you get a move up, retracement, continuation of the trend, or a move down, retracement, continuation of that trend. That's how obviously you're going to be spotting trend continuation. Now, you can spot trend reversals when you move down, retrace, consolidate, and then break through those retracement levels. That's an upside reversal. And if you move up, retrace, consolidate, and then break through those retracement levels, that's going to be a downside reversal. So if we take a look, right, on our initial rally that we had from about October to December, all right, we move up, we retrace down here to our 50% retracement level, and then we actually continue the trend and we establish some new highs and hit our first bullish price target here at 68.92. Now, bullish price targets are a much better sounding version of resistance, right? It sounds a lot better to say bullish price target than it does resistance. But for right now, 68.92 is going to be a major resistance level, okay? Above there, we have 71.05 and 73.27, as well as 76.12, okay? Those are going to be our bullish price targets if we continue bullishness and are able to take out our resistance level here of 68.92. Now, if you take a look here, we're starting to retrace, but what we did this time is we actually threw on our 78.6% retracement level, okay? Remember, I mentioned that these 3 right here are the most common and well-respected, but there are many other Fibonacci levels. And so the 4th one we're looking at here is the 78.6, and I like to call this the fake out level, right? And there's a good reason behind it. The reason being is because, you know, most people are looking at these 3 levels, and sometimes you'll dip below that 61.8% level like we did exactly right here and bounce right off of the 78.6. So a lot of people got faked out over here initially, and then the bounce right here, we could actually end up continuing this trend and coming up and retesting some of our previous levels, okay? So for right now, the major levels of support, as you can see, we tested this level, opened up there, wick down below, and then found some nice support. That's going to be 64.10 and 62.80. Okay, so if we come down, consolidate in this area and break below those levels, this is where we're bearish below these levels, okay? 64.10 and 62.80. If we break below 62.80 and flip that to resistance from support, most likely we're going to come and test some of our previous lows from $60 all the way down to the $55 region, okay? We don't know exactly where it's going to go, but above here, we have the possibility of continuing the trend and retesting our previous highs, as well as potentially even hitting our bullish price targets to the upside. Now, something we need to be really cautious of is this head and shoulders pattern that's trying to form right now. It isn't formed yet, so it's not confirmed. But what I like to do is I like to chart out the possible scenarios. So that way, you know, I'm prepared for a bullish scenario and a bearish scenario and can really understand why things may have not gone the way I wanted to them to if I was just specifically looking at it one-sided. And so we do have a left shoulder over here. And we clearly put in a head right here. If we continue rallying, right, and we end up getting rejected around the $65 to $66 region, roughly, we're going to end up putting in a right shoulder. Okay, and if we come down, put in that right shoulder and come and retest the 62.8 level, that's essentially going to be our neckline. Okay, and if we break below there after getting the right shoulder formed, there's a high likelihood that we're going to come down to our lower range in between here of about 54 to about 58.50 when it comes to the price levels. Okay, so definitely be very mindful of that head and shoulders pattern. You don't want to be caught by any surprises. Okay, now as I mentioned earlier, we tend to see 3 or 5 wave structures, right? So we did get a 3-wave structure right here in the market. Okay, and you can see over here we got a nice little 3-wave structure as well. This could end up turning into a 5-wave structure, right? So 1, 2, 3, if we, hold this level and stay above that 62.80, we do have the chance of getting that 5-wave structure, taking out our 68.92 and potentially coming up to the 71.05, 73.27, as well as 76.12 levels. All right. Now, I know a lot of people are really interested in this stock for the dividends. So maybe trading it isn't really why you're doing it, but this could help you in, spotting some key levels of support where maybe you want to add in at, and maybe give you some warning signs of, hey, well, maybe I shouldn't buy here at this specific level because, what if there's a chance of a pullback, right? And so the last thing I want to cover, guys, is going to be our relative strength index, the RSI. Now, if you're not familiar, what this is this is measuring the relative strength of a stock at its given price level. So there's something I want to highlight here, right? So if we take a look, we have a high on our RSI right here, okay? And if we take a look, we have a high right here as well on the stock price. Now come over here, we have a lower high. So you see how we have this down trend line? Take a look at what the price of the stock is doing up here. So we actually have in this moment a divergence where the stock price is going up, creating higher highs, but the relative strength index is going down, creating higher or lower highs. Okay, this is a term known as bearish divergence, and it's an indicator you can use to possibly predict some bearish activity. Now, it's never going to be a 100% accurate, okay, and it's not going to be able to predict if something's going to move 1% down, 5% down, or 20% down, but it is something that traders like to use to really help spot some potential future activity in the stock, whether it's bullish or bearish. Now, since we did that and we hit our bullish price target, we did get a significant pullback and we bounced right at that 78.6% level. So to me, it seems like things are following the technicals pretty well at the moment. We're dropping off of bearish divergence. We're bouncing at key levels. And if we want to keep respecting the technicals, we could end up getting this 5-wave structure to the upside. But just remember, if we break below 62.80, flip that to resistance and start closing below there on the daily chart, most likely we're going to end up, getting a retest of some of our previous lows. So just keep that in mind for sure. Now, remember, this video is not financial advice. All I'm doing is breaking down data. These candlesticks are nothing but raw data. The stock market is nothing but a live auction market where you're seeing buyers and sellers fight for, prices on something based on what they think it's valued at. And if you enjoyed this video, smash that like button, subscribe to the channel. I do these viewer requests every single week. So if you want to see your stock in the next video, all you got to do is comment down below. I'll get to it as soon as I can.